Let's get into it. Intuit, I just want to say, my personal experience, I used Intuit for the last 6 or 7 years. And Intuit is a accounting software for the non-accountants like myself. And we do balance sheets and quit your financials. We do payroll. Usually I just use it for payroll. So before we get into it, this is a joke. Before we get into it, Intuit is a great software. So let's start out how this happened. It was a small case study. It was based on customer satisfaction, again, assessor type of case from one of his predecessors here at HBS. So Scott Cook was the founder and chairman. He wasn't an entrepreneur. He used to work as a project manager for a company. And what happened was his wife was the one that stated, hey, it would be a good idea if we came up with some type of software that would do, our accounting for us, on a day-to-day basis. I guess she was one of those tech-savvy, wives that wanted to know, all of your business, and everything. But that was good because she's the one who actually started that. So he got him for college, and they raised some funds, and they developed the software. Actually, his co-partner developed the software, and they pitched it to banks. They thought the way of entry would be to go directly to banks, and it worked somewhat, but it didn't. So they thought that was their entry. So what they did was they looked at their model, they cut their prices down to about a third of what the competitors were, the H&R Blocks. There was a few other competitors I remember on the market at that time. I'm trying to think, there's a few more, but there were some other competitors that they had, and their objective was to be like Coke and Pepsi, was to just get on the retail shelves, and they needed more adequate financing to do that, and push it in the retail market. So they developed a model of data analytics and customer service set in their software, so they could do a lot of testing. And they worked on a model was that you can use the product. It's very easy to use because that's where people were having problems with H&R Block. The software was just too hard. There was no integration with the financial institutions at the time to do all of the data analytics. You had to do it yourself by scratch. So imagine how hard that is. You had to input all the data that you had, your own finances, your profits, your sales, the cost ratios. You had to do all the numbers yourself. It wasn't like the Excel of that time. You actually had to manually do it. I remember doing it about 8 years ago, doing it manually before the financial institutions got in. So the model of the use the product in 6 minutes or it's free worked. It was a great model, and because of that, they were able to get inside the retail stores. They offer free lifetime customer service support, which didn't exist. You couldn't call anyone on the phone. When you bought the software from the competitors, that was it. It was just software, but there was no tech support. There wasn't anything, and I'm talking about just experience. There wasn't. So they offered that, and their voice to the market, which is the first question, was the market research, product design, and customer service. And because of that, they were able to sell a third of the price and move it off retail shelves faster than from all their competitors. So the second question that they have was, I guess, their strategy and implications and how the firm organizes a lot of important activities and process the role of leadership, influence behaviors in the organization. Well, this 6 minutes of free marketing tactic, that was their actual keys to success. Pay $8 for shipping and handling. You can use the software. It was free. They used every, I would say, gimmick marketing tactic to get the masses of consumers at the retail stores. And the retail stores would be just your retail stores that you see, Best Buy and Staples and those retail stores where you will buy software. And in 10 years, just with their core products, the company was very profitable. Reached $3 billion in sales. They used the customer survey and data analytics, and their company employees use the same model of Commerce Bank. They use the same type of model. It was called a Follow Me Home program. It was the same model. I'm just going to say it's the same model of that, and the employees will follow this same model of customer service. And again, there's more testing that they were doing on this. On question 3, the case indicates that Intuit has traditionally spent about 20% of its annual revenue, 1 out of 5 sales on post-sale service. Yes. Is it justifiable? Is it a justifiable expense? Yes. And what was the role of service in Intuit's business model? How does the service delivery process relate to its marketing efforts? To cost management, source competitive advantage to the firm. Well, they had a bunch of relevant product line extensions. For example, they and I don't think it was so well when we were looking at the data. I was looking at the data myself with the model of the taxes. They had a TurboTax Intuit used, and most people would use that. And their objective was that they had enough data analytics at that time in 2000 for you to input your 1040 if you were a waged employee to do your federal and state taxes. And their marketing gimmick was it is free to file your taxes. Well, the federal government, you can file taxes for free, but the software will allow to do it for you and integrate with the federal government's institution to submit your federal taxes. So they had that extension, and then eventually they integrated with the financial institutions, which was their biggest advantage that they had. And once they were able to do that, they were able to integrate with your bank account, and your Intuit software, accounting software, integrate with your bank statements and all of your transactions. You'll put them on a balance sheet. They would show detailed reports, and you'll be able to look at deductions, write-offs. They'll put them in expense categories. So that it really started working. So they had a small business division. They finally came out with for small businesses, for CEOs and self-employed. They didn't have that before. They finally came out with that software. They just had personal accounting software when they first came out, and then they came out with the small business software. What was the challenges? The Intuit ability to sustain the growth it has enjoyed. Well, they had the Six Sigma process projects that was kind of holding down their revenue. Again, more testing that they had to go through, and once they were able to get past that and those projects, the company is very profitable. They created the right culture for their employees. Again, a Commerce Bank model that was based on customer retention, word of mouth really spread with Intuit. They had a referral program at the time for those consumers, and they were able to get market share. They were able to get retail shelf where there was a void. So same model as Commerce Bank. There was no one in that market that was really doing any type of customer service and data analytics on those clients as well. Word of mouth sales at a fraction of the price, and new product lines came out of that were also a niche in the market. We're a very profitable company. They're still very profitable to this day. I hope that sums up the 5 minutes.
For most of us, it's not easy to understand because we don't have the accounting issues that you Americans have.
I know.
But it's really, really easy to use it though.
Yeah.
I've been doing some stuff here in the US, and it's really, as you mentioned at the beginning, it's accounting for non-accountants.
It's accounting for non-accountants,
Very
right?
good.
But I wouldn't use it as an accounting. What I do is I use it myself to send to my CPA. And my CPA goes off of that, and then they'll take that and put that onto another CPA tool that they have that's much difficult and much comprehensive than the QuickBooks. But the QuickBooks got really comprehensive now. You can actually use it for accountants, and as they have one software just called Intuit Accounting, and the accountants can use that software too. I don't use the software, I just use the business, and then I can just integrate through a CSV file or Excel or whatever, and I can send that over to my CPA. So It works for me. I use it every Friday. I do payroll for all my employees and Intuit for the last 8 years. Yeah, so personal experience.
Great.
Love the tool.
Yeah.
And they charge, how they make their money is they charge the biggest source of revenue wasn't just from retail sales. It was also by the transaction fees that came from the financial institutions when you were doing payroll. They made billions of dollars off transaction fees. For example, if I do a payroll per transaction, not per dollar, they would charge $1, maybe $2 per transaction.
It's
Per
very
payroll.
interesting that one of their marketing, what is 6 minutes or free.
Yeah,
Mhm.
that's huge.
And
Aggressive.
then you don't have to returns.
Yeah.
You can keep the software
Mhm.
and you just don't have to pay.
Actually, I did keep the software and told them.
Oh, great.
Sorry, person. Actually, I did. So I was one of those, one of those guys that wanted to test it. And I don't think in 6 minutes I figured it out, to be honest with you, 8 years ago. So, I got it for free, to be honest with you.
Because
I did.
More than 6 minutes, right?
Yeah, I got it. I think I don't think it was a little bit more than $8. I don't remember that, but I purchased it and I called up and I told them I don't remember if I emailed them about 8 years ago, and they told me to keep it. They really did. So I kept the software.
But you still can use the software after you
I'm
keep
still using it.
And you pay now.
You pay now.
Yeah, I pay now. I pay every year the annual fee, and then I pay a transaction fee. So they got me. But yes, it works.
Would you say the switching costs are really heavy, right? Switching from Intuit when you've done years and years of your accounts.
But if it's simple enough, there's no high switching costs. That is one challenge looking forward. Because this is, this world is too dynamic. And this thing to shifting to the cloud computing, it might be a challenge for them because it might lower the barrier to entry to other service providers.
That's true. That's true. Yeah,
And,
definitely.
What they could do is try to create to connect in an ecosystem the individuals, accountants, maybe the financial institutions, and then try to walk in.
But y'all, I can think that would be a good solution going forward for them.
Because this call thing, it changed the whole thing.
It really did over the last 2-3 years. Really 2-3 years, especially Amazon.
I think Intuit makes some acquisitions in the space, and I think they've been really aggressively approaching it.
Yes.
Like you said, they integrate with everything from your bank account to the federal government to credit card to
Your credit score transactions, your credit score, all the financial institutions. Yes. You can work with their system, go inside your financial institutions with Intuit, and it will calibrate everything to different categories. Your credit. I mean, even if you have a loan, it'll have your loan on there. So if you have a loan from a bank and you calibrate the Intuit system, it will have everything for you. Yeah. I do loans and everything went into it. I put in the loan, interest and everything that calculate, and I just do automated payments. Intuit is what Commerce Bank was, I guess, it was in the retail market, but the way that they should have went, we should have been to an Intuit model. Very cost effective. It's just a software, so it's not a lot of overheads. They're very profitable.
But if you look at the income statement, this is a software company that's spending more money in customer service than on R&D.
Then R&D, yeah.
And I think the customer service is R&D because
Yeah.
you're getting all this feedback back.
All the data analytics. the
It's
whole
actually
purpose.
R&D.
Yeah, all the data analytics that they needed, and with a third of the price.
But they also need R&D too.
Yeah.
It's the new
Yeah,
technology.
that's why they came out with the new product, lines. So the tax division, small business, and they had new revenues coming from the financial institutions direct from the shelves themselves. So it wasn't just retail SKUs. They also were making money off financial institution transactions.
They spend like a 20% of their revenue to the post sales.
Yeah.
Mark, is it
Fantastic.
a big amount?
Just press
Quite a bit.
screen.
20% of revenue on post sales. So.
Crazy.
But as William said, it's a form of R&D, isn't it?
It's aligned.
Oh, William,
It's 8:30. We should
they
probably
spend
have time.
20% of their revenue to the post.
Yeah.
We gotta do press.
Is it a right amount? Or
I mean, it's 10 times
high.
higher than
10 times
most,
higher.
most companies like that sell packaged software. I think at the time,
Remember they had
but it's really
competitors.
R&D because they're getting all this
Yeah.
feedback that they're using
It's
back.
showing the results, and the results are
Yeah,
for it.
it's working really well. But that's kind of hard.